Hi everyone! This video is for those entrepreneurs who want to start a bakery business. In this video, we will be covering inputs which affect financial efficiency of this type of business. Please like, share and subscribe to this channel. The link to download this model you can find in the description of this video. Also, you can order financial models from scratch for your unique business ideas. We can help you with that. Our model consists of 5 tabs. Model itself, with cash inflows and outflows, internal rate of return calculations, sensitivity analysis block, recipes, and finally, simple and discounted payback period diagrams tab. First of all, let's create a rule that all inputs in our model will be marked with a unique color, blue. All other cells will contain formulas. This will ease our future scenario modeling, which we will execute many steps ahead. Marking inputs will help us or our business partners or bankers or any other third parties find and play with inputs easily, creating a huge amount of scenarios. Playing with inputs will give you the answers to simple but very important questions. How much money is needed? When is this financing needed? What is the structure of financing? What is the profit? What is the profitability? What is the payback period? And many other. Our model has got 10-year horizon of financial projections. First of all, let's create a list of years inside our timeline. First year will be an input. This will allow us quickly adjust the starting year of our financial model. Now let's proceed to the revenues. Revenue is one of key components of your financial model. The point is, you have to create a detailed, realistic revenue-generating algorithm, which will be reflecting your business idea individual peculiarities. If you manage to do that, you will trust your model's revenues, profits, payback period, net present value, cash flow, and so on. The less inputs you will be using in your business model, the more discrepancy you will face between reality and your calculations in the future. Here, in the next block of inputs, we can name our product line, all breads, cakes, and so on. Then we are adding on-off toggles for future scenario analysis. By the way, we will be adding a lot of on-off toggles, global and local coefficients, that will ease our scenario analysis many steps ahead when we will need to test the stability of this or that scenario. Then we need to specify the sales plan in units per product per month. Also, we are adding global coefficient for the whole sales plan and many local coefficients that we may use for specific products. For example, we can easily increase all sales plan by 20%. Or we can increase one group of product sales plans and decrease other product sales plans, or completely switch some products off from calculations if we think we are too optimistic with adding them into the model. So this is how on-off toggles, global and local coefficients work throughout the whole financial model. Adding this stuff saves a lot of time when model is ready, and we need to understand how this or that parameter of inputs affects cash flow, payback period, profits, and so on. What is critical decrease or increase for this or that parameter in percentage format that makes our project not interesting for investing in? Then we are adding selling price per unit plus local and global coefficients for pricing. Now let's jump to the next block of inputs, direct costs. In the next tab, we have a list of all ingredients which participate in cooking process. Then we specify the price per 1 unit of each ingredient. We also add on-off toggles plus local and global coefficients for this price. Then we're jumping to the yellow tab, where we have a very important block of inputs, the recipes. Here, from top to the bottom, we have the product line. From left to the right, we have a list of ingredients which participate in the cooking process of our product line. In the input area, we specify the consumption of this or that ingredient in metric units of this ingredient per 1 unit of this or that product. Then we are moving back to the first step where we will be setting up the year and month when the project will get the first revenue. Now let's get back a bit. We need to create some kind of environment where we will be able to analyze the revenues. And here it is. First of all, we need to create different types of customers. We can name this type of people who will be visiting our bakery. By naming these types of customers, we start creating portraits. In column B, let's allocate the revenues between different types of customers. Next step is setting up the average check for each type of customer. Here on the right, we have two very important columns for monthly and daily analysis. In these two columns, we can see monthly and daily amounts of customers of each type. We can make a decision whether this or that amount is real or fake. If we see that the amount of customers per day of this or that type is too high, we can reallocate the revenues, play with the average check value, or we can completely switch off this or that type of customer from calculations and see how the project cash flow is affected without this type of customer. Maybe we are too optimistic with it. This will give you a huge portion of new information about your business idea. Then we're moving to another very important block of inputs: the speed with which our project reaches the target revenues. When you start any business, it is less likely that your project will reach its target revenues right from the first month of operating activity. The time period while the project will be reaching its target revenues may be accompanied with operating losses. Let's go to the cash flow statement where I will show you operating losses. Here they are. It is very important to track the appearance and an amount of operating losses because they affect total volume of financing needed for your business idea. Here you can see the total financing needed for the business start is a two-component parameter. The first component is in investment stage expenses. Here they are. The second component is in operating losses value. These two components form your business idea financing. Now let's go back to our inputs. So here in this area we're setting up the percentage with which we are reaching the target revenues for each type of customer separately. Playing with these percentage values allow you to see the difference between financing needed in this or that scenario. This will also give you a huge piece of information about how operating losses affect financing needed for your business idea. Next block of inputs is about fixed costs. Here we have a typical year where we can allocate different types of fixed costs. Interesting fact about fixed costs: despite of them being so cold, they may have some seasonal patterns, or they can occur once in a quarter, or once in a half, or once in a year period, or they may have some specific individual algorithms inside typical year. We can set up these algorithms here in this block of inputs. At the end of this table, we also have individual on-off toggles for every fixed cost item, plus local and global coefficients for scenario analysis. Now let's get to payroll block. It has a very simple logic. First of all, we name all our positions. Then we specify the monthly salary per person on each position. Then we set up the amount of people on each position. Here on the right, we have on-off toggles plus local and global coefficients. Next block of inputs is devoted to investment plan. Here on the left, we specify what we are investing in. Then we have three columns with a timeline above. These three columns illustrate 3 months period before the project starts generating the revenues. This is your investment stage. In this area, you specify how much you are investing in this or that item and when you are investing. Green column illustrates the month and year when the first revenues appear. And of course, we have on-off toggles, global and local coefficients. We may also need to add a loan to our project. Let's look at it. First of all, we specify the amount of loan, term of loan, interest rate, when we get this loan, year and month, and finally, we set up the grace periods, if we have any, for interest payments or principal payments. Then we specify the tax rates. Here we have 4 taxes: revenue, payroll, profit, and asset tax. Let's assume that asset tax will have some monthly value. Other 3 taxes will have percentage value from their tax base. Finally, our model moves to the cash flow statement. Cash flow consists of 3 parts: operating activity, investment activity, and financing activity. Operating activity shows us, let's say, the breadth of your business idea without bank loans. Investment activity shows how much money you spend and on what before the project receives the first revenues. Financing activity shows inflows and outflows from different pockets like equity, loans that you will be using to finance investment plan expenses and operating losses. Cash flow is one of the most important tables in our business plan. Here we can see the structure of revenues, direct costs, payroll, fixed costs, taxes, investment plan, loan and equity, inflows, outflows, debt payments, and so on. The result from operating activity shows us the performance of our business idea without external loan burden. Cash balance at the end of the period shows us the cash generated by our project by this or that given moment inside the timeline. Then, we calculate the amount of different types of financing needed for our business idea. Now, we're moving to Internal Rate of Return tab. In this cell, we specify the level of discount rate. Here we have 2 more parameters. One of them is a discount rate count. The second parameter is starting discount rate value. Then, we move to the next step. This tab is very important. This is stress testing environment. Once we've created some scenario, we need to know how stable it is. What will happen with this scenario if revenues decrease or expenses rise? In this block of financial model, we can easily test it. Here we have our scenario output financials. This cell is a coefficient that we will be adding to any revenue or expense input inside our project. Here we have another input. This is a step of change of parameter that we will be looking at during our sensitivity analysis. If we change this parameter, this will affect this line. Column with 100 value is a current scenario financials. Columns to the left are project financials if the value of project input that we are looking at will decrease. Columns to the right are financials if parameter increase. In this simple table, we can see when our business model becomes less interesting, when this or that parameter of inputs will grow or decrease. Let's add this parameter to the sales plan. Now let's press Send button. Now we can remove sensitivity analysis parameter from here and add it to another input, for example, investment plan. We can also add sensitivity analysis parameter to any input inside our model. Let's set it to payroll, for example. So now we can create a huge amount of scenarios and test them from this or that perspective. This will be very interesting for the future business owner and will tell him a lot about his business idea. So thanks for watching. Please like, share and subscribe to our channel. You can download this model using the link in the description of this video. We can also create financial models from scratch for your unique business ideas. So see you in next videos. Thank you and bye.